Our next guest is sitting on the sidelines till those pesky debt issues in the U.S. and Europe are resolved. When he's ready to jump back in, he knows exactly what he's buying. One is an advanced copper exploration project, the other a gold one. Joining us now is James West, portfolio advisor for the Midas Letter Opportunity Fund. He is in Vancouver. James, good to have you with us.
Thanks, Michael. Good to be here.
All right. Now, I can imagine this pesky problem, as I say, of the U.S. debt crisis will be resolved at a very specific date. But what do you need to know out of Europe before you know that it's time to get back in?
Well, basically, we're going to see both the U.S. and Europe kick the can down the road a bit more by creating more debt. So in short, that's going to keep the party going. At this time, we're still building bubbles in all commodities. So all I need to see is a reorganization of the debt in Europe and essentially the same thing in the U.S., raising of the debt ceiling, spending cuts. It's all going to happen by August 2nd. We're ready to go after that.
All right. So you look at gold, for example, and what it's been doing as of late. It seems to be a bit of a vindication of the strategy of which you've been writing about in the Midas Letter.
Yeah, well, that's a strategy that 10% of the world has been following, and since 2002, it's been impossible to be wrong. All you had to do was say is that gold is going up, and certainly it's done that. And the seesaw pattern of rise, profit taking, fall is going to continue. The fact that they're going to need to issue more debt in both countries to kick the can down the road is only bullish for gold and for silver, and so that strategy still remains intact.
So then why are you interested in a venture exchange copper play?
Well, as I said, they're going to solve the debt issues by issuing more debt, and so that's going to continue the illusion of the bull market, which is what all of the financial managers in the world are trying to do. And so we're still going to be seeing that bubble that's been developing in copper for the last 5 years continue to develop. It's trading near its all-time high, and so the copper game is very much alive, and so you may as well get a glove and get in the game, I think.
Okay. And you're pitching Cuoro Resources, CUA, on the venture exchange. Why specifically that one?
Well, Cuoro's, it's just got everything you'd want in a speculative copper play. They had a drill hit of 7 meters grading 5% copper just a couple of days ago. They've got $25 million in the bank. They've got one drill turning now that's going to drill 25 to 40,000 meters over the next 12 to 18 months. 2 more drills are on the way. Management that's been there and done that. Really tight share structure, 30 million shares out. Most of the money was raised between $1 and $2, so it's just got everything going for it that you'd want in a speculative copper play.
What's wrong with my chart over here as I look on the screen from December right through into the spring? There really doesn't seem to be anything going on over here.
Well, that's because they've spent that period structuring the company. It only went public earlier this year, just after the PDAC. They've raised all the money, and they've just been sort of getting organized. So now the drills have started turning. Everybody's waiting to see what's going to happen. That first hit was just an indicator, but over only 7 meters, that's really not enough to say, hey, this is an economic deposit or not. With 3 drills turning and drilling 25,000 meters near term, that's going to be the proof in the pudding. So if this high-grade surface expression is going to pan out at depth, that remains to be seen. But if you get those kind of grades throughout the deposit, that's a very rich deposit at 5%.
Where do you see this stock, say, 12 months out, James?
If I could pick a target 12 months out, assuming best case scenario for those drill rigs, I would easily say $6, $7, $8.
What's the risk to that forecast?
Well, risk is always 100%.
And I can imagine it's execution more than anything else?
Well, exactly. It's a drill program. You don't know what's going to happen at the tip of the drill. Right. If they, start to prove up a large, high-grade copper deposit, the stock is highly undervalued. If they run into nothing but chalk, well, then the stock is overvalued. But that doesn't seem to be the indication, in that this is a VMS system, which are typically very large, with a huge surface expression that they've been able to measure. And so I don't think there's that much risk in terms of, they don't have to raise any money. They don't have to get drills on the ground. It's not a question mark of whether there's copper present. It's not a question mark of whether it's high grade. It's not a question mark of does it start at surface or not. All those factors are there. So in that respect, it's largely de-risked as a speculative drill target can be.
Tell me about management, because, you know, when you're at this stage in the game, the guys running the show are probably far more important, at least on the outset, than putting that hole in the ground.
Yeah, that's true. Robert Sedgemore is the CEO. He's been there, done that. He was with BHP Billiton, if I'm not mistaken. I get my CEOs confused sometimes, but he's from a major mining background. I actually met with him when he was in Peru recently. We were going to go see the project. It was a bit early. The weather was a bit rough at that point, so we didn't get to see it. But I got to spend a lot of time with him and hear a lot about it. And certainly, you know, his whole approach and the people that have financed the project. You know, these are guys who are it's the A-list of Canada's sort of resource finance groups. So, you know, every institution that you'd want to see is in there. Robert Sedgemore is the CEO. You know, 3 drills on the ground, 40,000 meters, 7 meters of 5%. I mean, it's a wait and see at this point.
Now, before we let you go here, Rockridge Capital. Why have you been writing about this company lately?
Well, Rockridge just came out this morning with an intercept of 4 meters grading 213 grams per ton. That in itself isn't that spectacular. I mean, 213 grams per ton, that's amazing, but only over 4 meters. But what is interesting is that this is on a 500 by 500 meter surface expression where there's been over 5,000 artisanal miners working this ground for almost 50 years. And so right now they've got 87 reverse circulation holes at the lab and a further 16 diamond drill holes at the lab. And so they've got all these results pending at the lab on this ground that has been producing gold for 50 years for 5,000 subsistence artisanal miners. So when you've got all that sort of drill core in the lab and RC drill results in the lab waiting to come, I mean, again, this it's a de-risk speculative play. It's all there. It's just a matter of waiting to see what's going to happen. Are they going to hit more of these things? Was that 4 meter section a high-grade feeder zone that they're going to find the main system of? And so given the fact that this is occurring on a 250 square kilometer surface expression, which is the total size of it, you know, that's really the exciting part of it. I mean, how big might this thing be? It's in elephant country in Mali, Africa, which is, you know, politically safe, home to no end of 5 million plus deposits that have produced gold that are owned by Barrick and African Barrick. And so it's one of those situations where it's, you know, now is the perfect time because of what's going on.
James, good to have you with us. Thanks for joining us today.
Thanks, Michael.
James West, Portfolio Advisor to the Midas Letter Opportunity Fund.